This video is to encourage you to take investment seriously. I know not everyone understand what investment is all about and how to go about investing. Or people who do know, they don't really have time to share with you the information. Or some people don't really just want to learn how this works. And some people confuse investment to business. Business and investment is different. Of course, you can invest in your business, but the two, when you have to apply them, is different, even though the end goal for both is to make you money, right? So let's look at business like this. Business is you creating something like a product or a service that you sell to people, and in return they pay you money. While investment, you are investing in a company that already create a product or a service, and they have shares that they are giving out to the public to buy. So you are investing in a company that pays you return in the form of, like, you buy stocks from the company, or you create your own company, and you invest your time into it. Right. And in that case, you are going to be paying yourself a salary, and you're going to still want to invest, part of that money, the salary you receive from your company. So your company is your investment, yeah, but also personally, you need to create wealth, to build wealth, because the company is going to help you to produce cash flow, right? And that cash flow, you're going to use it to buy assets. So when you look at investment, we are looking at assets. You are buying assets like real estate, like gold, like silver, being part of the stock market, or buying Bitcoin or crypto. Now, guys, why is it important for you to invest? You are investing for your future. You're investing for your kids. You're investing for you tomorrow. Let's say today you lost your job. What will happen to you? You're going to go back to square one, right? To start again, every month you get your salary. Before the next month, you still want to borrow money, or you still lacking some stuff, very stuff to buy for yourself. Like, you cannot depend on your job alone, and you cannot depend on your retirement funds, or whatever the government or what people will tell you. Invest in your pension. Your pension cannot really take care of you the way, if say you accumulate asset over time, is going to help you to live a comfortable life, travel, spend your retirement life like comfortably, going around the world, seeing places, enjoying whatever you want to do, like, I mean, making you feel comfortable, knowing that you have worked all these years, and right now you can give yourself a treat. You don't have to, struggle again to say, okay, if say I want to travel to this place, I have to wait for the month end for the government to pay me some money, through my unemployment fund or through my pensions fund, and so on and so forth. So you starting today, like when you receive salary, choose any asset out there, be it real estate, be it commodities, any market that you can study and understand, try to put some money there every month. It could be just $100, it could be just $200, just put that money there. Imagine that when you need a car, right? You go to a car company, a car dealer, and the car dealer is gonna look for a financing company to pay that car for you. So you are taking a loan to buy the car, and usually you can take a loan for about $30,000 or $60,000 or $100,000 to pay that car. Right, the financing company will pay the car for you, and you're gonna start paying them back every month with interest. Think of this like, you are investing in a car that depreciates in value over long time, because the next day you cannot sell that car the same amount. The next 10 years or the next 5 years, you cannot sell that car the same amount. But if say you study well and look at different assets out there, and you say, okay, I want to perform this same thing that I did with my car. I want to take out a loan. I'm going to buy this asset. I'm going to leave it there. Then I'm going to pay this loan for 10 years. So in essence, you have put money in an asset that can appreciate in value over a long period of time. I'm not saying you should go and borrow money, right? That's not what I'm saying. But what I'm trying to say, I'm trying to give you a scenario where one act is good, like it's sustainable, and another act is not sustainable. Like if say, for example, you really want to invest in something, you want to take loan, you already have an existing business that you are taking loan to, pour into that business, or you have asset that you know, okay, I have this job, I'm gonna take this money and accumulate this asset over a long period of time. Then my job can sustain me and pay back this loan that I took, right? So in that essence, you are buying asset for the future, for your future, and you're working to pay for it. But the best way for you to do it is whenever you receive your salary, try to look at something, buy something. Look at it this way: when you receive money, money is meant to be spent. You can spend your money on, things out there. But when you spend your money on asset, that money appreciates in value, because when inflation comes, the value of money reduce. Like what you can buy with money, increase, meaning you need more money to buy stuff, right? And if say you need more money to buy stuff, it means that the companies who are producing the stuff have to increase the value of that stuff to make it expensive for you to buy. And if say companies makes product or stuff that you buy, like groceries, expensive, who do you think is making money? Of course, the company is making money. So if say you invest in grocery stocks and grocery stocks goes up, you're gonna be making money, right? And every company want to make money every year, and that's how the valuation of that company keeps growing every year. So if say you decide to put your money, let's say $100 every month when you receive salary, at least you're putting that money into work for you. That money you can buy that stock, and that stock fall in value, let's say 10%, 50% is good. Because you understand that the fundamentals of this stocks is good, the company is good, and they are going to be here for a long time. And because they're going to be here for a long time, it means the value of that company, increase, even though it has fallen 50%. For example, most people are saying that Bitcoin has fallen from 60,000 or 68,000 to 15K or 30,000. Now Bitcoin is about 36,000, as of this video. But those who look at Bitcoin per price, per the price of Bitcoin, got it all wrong. They look at something based on their value, what it does. If say people are going to be buying it long term, and if say that particular thing is solving a particular problem or is solving problems, people are going to understand and buy it. And in this case, Bitcoin is solving a problem. That's why you see big hedge funds in the States, in different countries, or billionaires are going into it. Retail investors are going into it because they have realized that this asset is good and they want to have it in their portfolio. So you who bought Bitcoin at 68,000 and you keep buying it every month because you know that next like 10 years or 5 years or 20 years or the next 30 years is going to be worth so much. So you buy it in anticipation of the value in the future. It's the same thing when you start a company. You start a company and you expect the value of the company to grow, like, to make money in the future. You are anticipating based on the resources you have in hand, and based of what you understand about your business and what you know will happen in the future if say you keep doing what you do. So if say you keep taking money every month and you're not able to buy any asset, that's bad for you, right? Because y- you might not understand right now what is going on. But when you get to a point where you are not able to, like, you don't have that much strength to work and you're not able to live the life that you want to live, it will be devastating to you to realize that you have worked all these years, so much, and you're not able to take care of yourself to get the life that you want for yourself. Right? You can even take part of your investment to start a business. So I really want you guys to take this serious. I know most of you don't have, like, not most of you, almost everyone is not being taught about how to invest, properly, how to go about, doing this. And for the past years now, I've been studying investment closely, how to invest sustainably, and I've realized that the little you have and put it in something like an asset, you're gonna be grateful for yourself, because that wouldn't be just only about you. It will be also that you're planning for your family, you're planning for your kids, you're planning for what is coming in the future, right? Those who invest long term are going to benefit long term. Those who invest short term are going to benefit short term. At times, you might buy an asset, as I mentioned, and the value goes down. It doesn't mean that that company is bad. Like Facebook shares stumble about 50%. Doesn't mean that Facebook company is going bankrupt. No, it means that Facebook have taken a new turn, and most investors don't trust that new focus of Facebook, which is going to the metaverse or changing their name to Meta. So most investors left Facebook, but the one that stayed with Facebook understood what Facebook is building, and as Facebook keep building that new environment, new investors are gonna come in. Are gonna come in and they're gonna drive the price. So you who is someone who believes in Facebook and you saw that the price of Facebook was down, it gives you an opportunity to buy Facebook cheap. Why do you want to buy an investment when it's so expensive? You don't want to buy something which is so expensive, or you don't want to buy something because the price is going up. No, that's not a reason to buy something. You buy something because you understand that the value of this asset is going to go up. You can buy gold. Gold has been here for thousands of years, and it has proven to be one of the hedge against inflation. So if say you put $100, $50 every month, or $10 every month, right? Every month for the next 10 years. Do you know how much you're gonna make in terms of like the accumulation of value that that money will give you based on that asset class? That's huge. So I want to urge you to take some time back, understand investment, understand business, understand how you can, do both, at one point in time. Not everyone can do a business, of course. Not everyone can open a business. Not everyone can become an entrepreneur, but everyone can become an investor if, say, you understand how to go about it. And I am here to help you. If, say, you don't understand, I have a series where I can help you one on one, educate you on how to go about it. First of all, make you to understand what investment is all about, the different assets out there that you can take advantage of. And if say you realize that, wow, this is something for you, that's when you can invest. You don't have to invest. You don't have to be scared that, okay, if you talk to me, it means I want you to invest. No, my goal here is to give you the knowledge. I want you to understand how this works and how you can take advantage of it. Anyone out there, be it poor or be it rich, investment is good. People take advantage of situations and the situations will favor them. But people who don't take advantage of situations, it won't favor them in any way. So if say you want to take advantage of now, then go below this video, connect with me, go through my link tree, and you're gonna see a section where you have to book an appointment with me. Let's talk for 30 minutes and see what will come out from that discussion. I want to give this for you for free. For free. You want to talk with me for free for 30 minutes. And after 30 minutes, you can decide if this is for you or not. So if this video was helpful to you and you want me to keep creating more of such videos to help you, give you that motivation to look at investment differently, then subscribe to this platform, this video, like this video, and share it with your friends. You can help this content reach out to more people who are looking for something like this. Until then, guys, see you in the next video when you subscribe. Bye bye.